Is a full-blown trade war, Bob, with China now inevitable?
It's not inevitable, but we're moving in the direction of a trade war unless the brakes can be put on this escalating process of one country taking an action to impose tariffs and the other country retaliating, and then the first country decides it wants to double down and do more, and then you could get a sort of escalating series of action-reaction that does lead to a trade war. In addition, we have a number of our European partners and Canada and Mexico engaged in at least a trade dispute with us over aluminum and steel, and perhaps cars if President Trump moves further in that direction. So we've got a multi-front series of trade conflicts. Whether it becomes a trade war, we'll see in the next month or so.
Well, you've been the vice chair of Goldman Sachs International. You were there for many years. You were at the Department of State. You were at the Commerce Department. You've dealt with official negotiations, business negotiations. Can we avoid it?
We can certainly avoid it. The question is, can we, after this initial round, which is likely, that is, each side, China and the U.S., impose tariffs on $34 billion worth of trade. At that point, perhaps having done that, they agree to sit down and avoid this deteriorating further. And that is going to have to happen, or else you do get a series of action, reaction, action, retaliation on both sides.
Let's bring up a chart from that GTV library we were just talking about, Bob. It looks at U.S. trade policy uncertainty surging. This is something that is obviously affecting markets, emerging markets. This is around the world. Federal Reserve officials mentioning it. Is this something that could derail markets further? Is it something that could stop the Fed from raising rates a total of 4 times this year? Well,
it could. It could. I don't know if it would derail markets, but it certainly could disrupt them, particularly in the stocks of a lot of American companies that depend very heavily on exports for their profitability, and also a lot of jobs in those companies depend on exports. So that could be, and those companies could be severely disrupted. And in terms of the Fed's activities, in fact, 2 regional governors and Jay Powell have both indicated, Powell in a recent speech in Europe, that they might have to reconsider if the trade problems deteriorate and cause the economy to weaken, or at least the growth to decelerate to a greater degree.
Bob, it's Yvonne in Hong Kong. And we've been seeing here in China in particular, the academia have been flagging financial panic. If you take a look at the mounting pile of debt, we're seeing these defaults. Of course, what we've been seeing in the stock market entering to a bear market, and this plunging renminbi right now. But if you look at the economy, like the Li Keqiang index, so to speak, we actually are seeing growth above trend. So do you think that China can still pull up with this fight, and how much longer can they?
Well, I think the Chinese economy is still strong. It's not as strong as it used to be, and it's been growth of the economy has been a little bit weaker over the last several months. But I think that the currency is a really interesting issue for China. On one hand, the Chinese don't want the RMB yuan to go down dramatically as it has in the past. That makes them nervous. On the other hand, somewhat of a decline improves the competitiveness of Chinese goods, which helps to a degree to offset the additional tariffs that they're likely to face in the United States. So I think they're looking at the decline so far, probably with not a great deal of apprehension, and probably anticipating it'll help somewhat Chinese companies because of it'll offset the anticipated tariffs in the United States. If it were to sharply decline, that could cause a greater degree of capital outflow, and that would make them very uncomfortable. So they're trying to really walk a fine line.